get this party started. So, folks, I'm really excited about this. As you guys know, my name is Kunal. I am the CEO, head janitor up here at Bulls on Wall Street. I'm going to be teaching class the next 4 days. I'll probably have my right-hand woman, Mary Beth, come join us for one of the days. She was one of my first students and my business partner. We tag team a lot of this stuff together. Almost everybody you see like at our company, over the years that, that are actually employees of our company, they all were my students at one time, Jordan and all these guys. And so you'll often see either the customer service or the sales or just people that come in and teach class. They're often our students in hiring. It's so hard to hire good people, but when you watch somebody work and you've taught them yourself, it's much easier to have that person as your employee. And so we've got a family business. All these guys are my students and my friends and family. And so we've got a great group of people. And Mary Beth is, the person I run things with side by side. I met her now over 5 years ago when she was coming out of college, and she wanted to learn how to trade. And from there, our friendship grew, and she became, just a fantastic trader and the top trader in our hedge fund. And so she'll help come in and teach class. If you have any questions, guys, feel free to email us at all. This is my email. This is Mary Beth's email. If you've got a support question, hey, where's this? Where's that? I can't get into this. Email my guy, Kevin. He's awesome. He's my best friend. He's my roommate. We have been friends since the age of 10. And so he's on beck and call 24 hours a day. So, if you buzz him in the middle of the night, he's going to be super pissed that you woke him up, but he will pick up. And so he's pretty good about that stuff. So hit him up. And by the way, guys, if you guys just ever want to, chat about stocks or you ever need any help, you can, this is my cell, feel free to hit me up. I love hearing from people. To be honest, I want to know if you're one of my students or just somebody I've never heard of or seen in my life anyways. But I do love talking stocks. I never turned down an opportunity to talk stocks. And so feel free to text me or email me or call me anytime. If it's an admin type of question, a paperwork question, I'll probably tell you to bugger off. There's nothing that I'm worse than busy work. I'm terrible at answering, technical questions and stuff like that. But I love talking about stocks. This is my life's passion. I love talking about business and self-improvement. So if you have any questions on your career or stocks or just, making money or the mindset of, being a trader or a businessman, I love that type of stuff. Hit me up. This is what I do. This has, been my life's passion. I have been trading since I was 18 years old. Most of it unsuccessfully. I started as in college, and just like many people, I had a lot of ups and downs, like many of you guys will. And it wasn't till later on, after years of kind of disappointment, where I found a mentor who actually works for us now, and his name is Paul, and he runs our swing trade service, which is for part-time traders. And Paul is, he had a blog called the Market Speculator Blog Spot, and he took me under his wing and just showed me everything that I was doing wrong all these years. And it was an amazing thing to have like a mentor that actually was going out and making money that you could ask questions to. Because during this time, so many years ago, you read books and then you got questions, and it's like, what do you do with those questions? Or you learn something and you have questions, or you try something and it doesn't work. And you need that feedback, right? Having a great teacher is not just about answering questions, but about that continuous feedback of, hey, this is what you're doing right, this is what you're doing wrong, and then helping you through the ups and downs. Sometimes, a good coach is often just a good friend, because in trading, what you'll find as you go on later is that so much of the mistakes we make are self-inflicted. Mostly, at some point, it's not about strategy. It's just about making your strategy happen. And so there's all that mental and emotional mistakes that we make. And so having a great mentor can really help you get through those rough times. And that's what Paul did for me. And I thought that changed my life. That changed my life. If I hadn't met him, I'd be in a cubicle literally making 150 phone calls a day. I worked as a recruiter, and so I was on the phone all day, just boom, cold call, cold call, cold call, cold call. And I'd probably still be doing it, if I hadn't met him. And so it's just like, how much of life is just about that kind of teacher-student relationship of finding somebody. I got really lucky searching him out. I bugged him a little bit, and then I had to pay him. And this is so many years ago. And he took me under his wing like his son, and it was awesome. And now we work together, and so it's even better. It's like we actually, 4 years, we hadn't talked for years except emails about my progress. And then about a year and a half ago, when I was trying to get a service together for part-time traders, people with jobs, I had interviewed some other traders, and there's only one guy in the back of my mind that I really wanted to work with, and that was my old mentor. So I tracked him down, and lo and behold, he works with me now. So it's pretty cool. But guys, let me give you a little bit of details about what we're going to cover, and then we're going to get to work today. So this course, we're going to Sunday. We're starting Sunday. We're going to Wednesday. All right. It's going to be at 8 p.m. We'll go for an hour or so, till really whenever it takes to get finished. I'll make sure at the end of class I answer all your questions. And guys, when you have a lot of people in a workshop, there's like the questions just come in like rapid fire. So, if I don't answer yours right away, like when this ends, it's not because I'm ignoring you. It's literally that there could be 100 questions before yours. And I just go and answer them in order. I try not to pick and choose and all that stuff. I'm not that smart. I just got to go one by one and get them done. If you have any audio issues, click on the audio button in the GoToWebinar window, and then select telephone, and you'll get you'll be able to dial in. You'll be able to dial in. But for the most part, GoToWebinar is a great tool. Like, it works pretty easy. So in tonight's class, we're going to cover 3 topics. Number 1, just market basics. The essentials you need to understand how the market functions. We're going to go into the basics of technical analysis, and then I'm going to show you how to set up charts, okay? And so technical analysis and the use of charts is how I trade. There's a million methods out there on how to trade. When I was a new student, when I was 18, 19, I started the way a lot of people start. I was watching CNBC, and all you hear about is Warren Buffett. So I said, okay, let me read some of the stuff on Warren Buffett. And so I learned about value investing. And one of the things that happens with value investing is, well, you can only make like 10, 20% a year because you're investing. It's a longer term thing, and it's just different. And when you only have $500, right, making $40 on your money is not going to do you any good. And so it was just too slow, and it didn't work for me. So then I tried growth investing and dividend investing and all this type of stuff. Then I moved into IBD, International Business Daily. And, I tried all that stuff, the William O'Neill kind of trend techniques. I tried all of this type of stuff. And, through it all, I started to kind of build what I like to do. And then I met Paul, and we kind of meshed together a lot of the things I had learned with what he does. And that's using technical analysis and using charts to govern all our trading decisions by using the flow price and price action to make trading decisions and guide us in every single thing that we do, from how we enter and exit stocks to how we manage them to the psychology of why and how stocks move. And so we'll start getting into a little bit of that. I'll show you some free tools that I use to get it all started. Remember, it's a 4-day shop, so we're building a foundation today. Tomorrow we'll add a little bit more onto it, and then days 3 and 4 we'll get a little bit more in depth and a little bit more advanced. But as beginners, this is kind of how we start. And even even in our 60-day boot camp, I start everybody from the dead beginning. You never just jump into some wild technique because, well, nobody'd understand it. There's years of experience that goes on before that, before you jump into it, right? So we got to start from the beginning. So let's get this party rolling. So first I'm going to just go over some terms and definitions so that we're all on the same page. That way, when I'm sitting there on day 3 talking about this or that, you guys know exactly where I'm going from. And just a little bit of word to the wise, once this class is over, you guys are going to have a really good solid knowledge of not just the stock market and stocks, but also some techniques you can use to actually trade. But one of the things I'll tell you guys is don't just go in and start trading, okay, just because you learned a couple things. That's not how it works. This is a lifetime endeavor. Trading stocks is a job, and it's no different than being a doctor or a lawyer. There's so much that goes into it in terms of your time and investment and your blood, sweat, and tears. And this is no different. Think about what a doctor does before they ever do their first surgery and get that first big paycheck. There was years of stuff that goes on before it. Now, obviously, we don't all have 10 years to learn how to do this, but what we have to do is take some serious time to really sit there and learn the information, but then practice it. And so, one of the things I recommend after you're done with this class is review your notes and study your notes, right? And keep studying. And before you ever commit $1 of your capital, of your hard-earned money into a stock, practice trade. All my students, I put them on simulators, like trading simulators, and they make thousands of trades before they ever actually trade live. And that's really, really important, because when you're on a simulator, that's going to tell you whether you at least have an edge or your strategy is sound. And then that'll give you the confidence to actually go and put some dollars to work and see if you can make this thing happen. But there's that process, right? So you have your book knowledge of the things you learn. And then you've got to go out and practice it with, a trading simulator. And only once you get a certain type of result and your metrics are where you need them so that you feel comfortable you can go out and extract money from the market, that's when you go out and practice live, and go and put some money to work. I made a mistake as a younger man of just going in and starting with some money, then adding more money, and then adding more money, and then adding more money, and then I lost it all. And I did this cycle for a long time. And when I had a job, rather than saving money and trying to do all this stuff, I just throw a bunch of money into a trading account and fiddle around with it, and I would just slowly bleed it out with all these mistakes. I'd make a few good trades, I'd get a little confident, and then it'd all be gone. And this cycle lasted for years and years and years. And the mistake I made was, well, number one, I didn't have something defined, a methodology or a system of who I am as a trader, like a business plan. I have all my students make business plans. They can be sometimes 10 or 15 pages long on who they are as a trader, how much money they're going to trade with, what they're going to do, what their routines are, every single aspect of it. Just like you were going to open a restaurant or a bar, your trading is a business, and so you have to have that. And then after the business plan, they start practicing on the simulator. And when they are able to make money every single day, then we know, okay, let's let this guy go on and trade live. So just think about that. You're going to learn some cool tricks in this class and some cool techniques, but that doesn't mean you just go out and start jumping around and putting some money in. That's what I do 10 years ago, but I've learned some harsh lessons. There's a reason that I have absolutely no hair. Look at my skin. I had the skin of a young man, but I had the hair of a very, very old man. And this is not genetics. This is from years of making stupid mistakes. And so don't go in there, right? Don't go in there till you know for a fact that you're going to make money. It's one of the best things I can tell you to do. So let's talk about this. The stock market is essentially an auction in which you can buy and sell units of stock. Currently, there are over 8,000 different vehicles that you can trade in the stock market. The stock market is open from 9:30 a.m. to 4 p.m. Monday through Friday. That's Eastern time. So for some of you West Coasters, I bow down to you for the ones that can start working at 6:30. Geez, it's so hard. But awesome part is you're done at 1. You have your whole day in front of you, but you're going to feel like a zombie. What's a stock? You know, basic thing. A stock is a contract granting partial ownership in a company. As the perceived value of a company and its stock goes up, so does the price of a stock. Mutual funds. A mutual fund is a professionally managed investment vehicle that uses the fund of many investors to hold stocks, bonds, and other assets. Unlike stocks, mutual funds can be bought and sold at the end of the trading day. Additionally, some specify a minimum investment amount and can impose fees when you buy or sell the fund. Exchange-traded funds. Exchange-traded funds are similar to both stock and mutual fund. Like mutual funds, they hold a basket of stocks basket of assets like stocks, bonds, or commodities. Like stocks and unlike mutual funds, they can be traded actively during the day. So essentially an ETF is like, it tracks an index. So, you know, if you're looking at, right, if say you wanted to trade gold, rather than buying physical gold, you know, gold has an ETF that says GLD. So it's just a gold, it mimics the price of gold. And so, you know, when you think gold's going to go up, right, you essentially can play this. And you have that for oil and gas, and right, there's stuff for everything, solar. So anything you can think of, uranium, they have ETFs for it. Small cap stocks, mid cap stocks, large cap stocks, food stocks, biotech stocks. You know, one of the ones that I use often in my retirement accounts is IBB, which mimics biotech stocks. So you have ETFs that have a basket of stocks within them. So it's, you know, it's similar to a mutual fund. And I use this rather than mutual funds due to the fact that you can trade them actively, but also the fees are minimal to non-existent. Where historically I found that mutual funds typically, you don't actually beat the market. Mutual funds is a great business for the mutual fund owners and the brokers that sell them, because, you know, average mutual fund probably makes like 7-8% a year, but then they get charged at 3 or 4% a year in fees and tax and all this type of stuff. And so, you know, you barely just stay afloat. Where, you know, if you just bought an ETF that mimics the general market, you would get the same return, but you wouldn't have any fees. You know, you'd have like a small fee of, say, 0.5% a year. And so when I'm in my retirement accounts, I only use ETFs rather than mutual funds for the specific reason that, right, you know, there's no point of paying some mutual fund manager a bunch of fees when he can't even beat the market. If you Google it, you'll find out that a majority of mutual fund manager, they never beat the market. They never beat the market. And there's a whole host of reasons for it, but, you know, a lot of it is just that mutual funds have mandates. You know, some mutual funds, they have to mimic large caps, small caps, this cap, and you have to stick to it, and you may have hundreds of stocks in there, you know, and so it's like, what's your edge? You know, as retail traders and investors, our big edge is always that when we find something amazing that we don't have to diversify, we can have concentrated positions if it's worth our time, and that can help kind of boost your returns. An index. An index is a group of stocks with something in common. So the two popular indexes are the Dow Jones and the S&P 500. Traders, investors, and market analysts use indexes as a benchmark with which to judge the overall strength or weakness of the market at any particular time. So like a lot of you guys will know that, you know, in terms of, hey, you're going and you're walking across the street and you ask your neighbor, like, hey, what's the market doing? And Bob replies back, 15,000, loser, right? And he's referring to the Dow Jones Industrial Average. That's like the most commonly used one. And the Dow Jones is essentially the top 30 of like kind of the biggest stocks in the country. Okay, so that's like one indice that you can track. The S&P is, you know, the top 500 essentially. So buying and selling stocks. To buy and sell stocks, you need a brokerage account, and it needs to be funded. So you need to deposit some money in it at some point. There's a lot of different brokers around. We'll get into that a little bit later. but for the course of things like this is like Ameritrade. So I've got like some retirement accounts at Ameritrade, and so essentially if I want to buy using Ameritrade, right, this is like an order platform, and so you're buying and selling within this thing, and you've got to put money into it. So there's Ameritrade, E-Trade, a whole host of them that I do. Now, I don't do any of my day trading through these things, but that's like one type of thing you can do. This is like when I'm day trading during the day. This is another application I use. This is called AppTrade. That's the technology for what we trade inside our hedge fund, where me and my students trade. And so this is a different application where we're buying or selling or shorting different stocks. A stockbroker is a company that executes the buying and selling of stocks on the behalf of its clients. Today, most brokers provide an online platform and all the tools needed for their clients to buy and sell stocks on their own. Some brokers charge a monthly service fee, but all brokers will charge commission, which is the fee you pay when you buy or sell a stock. In class 3, we'll talk about a little bit about the differences between all the brokers and stuff like that. But in essence, anytime you make a transaction, right, like with Ameritrade, you can pay $10. Okay, you can always call them and get it reduced as over time as you're a better customer. They'll reduce it a little bit, but you pay $10, and that's a huge cost of doing business, right? Because to go back and forth between a buy and sell, it's $20, and so where you trade is going to be a really important thing, because like for me, I don't even think I could be a profitable trader if I had to pay $20 round trip, because I make dozens of trades a day. I would be paying like $500 a day in commission, right? So where you trade is really important. For me, I like and believe in per share brokers, where rather than getting charged per trade, I get charged per share, which is something we'll talk about. But there's a lot of different brokers, and the ones that you choose have to be tailored towards the type of stuff that you do. Now, like for me, like for my retirement accounts, like my IRAs, using Ameritrade and paying, X amount per trade is not a big deal, because in my retirement accounts, I'm only making, right, a handful of trades a month. And so whether I'm getting charged $8 or $7 or $6 is really a small drop in the bucket. It wouldn't matter. Where if you're day trading, right, if you're day trading, you're just sashaying in and out of all these stocks, then it's a little bit different. For those of you guys that are in my chat room, you'll see it. Like when I trade, and I'm in the chat room calling out trades, like, I'm trading. Like I'm moving in and out of this thing like a man, right? I'm going in and out, and I may make 10, I may trade 10 different stocks in a day, or 7 different stocks in a day. And in between those, I'm buy, sell, buy, sell. And so I may have a lot of executions in there. And so when I'm day trading, I need a whole different type of broker that accommodates that mass volume of selling. All the brokers will have different interfaces for executing shares. And that's something also, and when you guys start to actually go and trade live, will be really important, is finding a broker whose interface is something that you're comfortable with. One of the reasons that I use Ameritrade is that they have this quote tracker software that's actually been discontinued, but the Ameritrade customers get to keep it. And this thing's like 10 years old. But I've used it for so long that I like having it up. It makes me feel a little bit comfortable during the day. And so I still keep my accounts with Ameritrade because I like their interface, where I've had other brokers where I hated their interface, and so I couldn't use them. There's companies like Interactive Brokers. I don't like their charts, and so I never use them because they don't have the tools I need. Different things, different components that all brokers will have. So when you're looking and you're looking at a broker, there's going to be different things that are about the execution of the trade. So when you're looking, there are different things that you fill out, like number of shares, right? So it's like whether you want to trade 50 shares, 100 shares, 200 shares, 300 shares, 500 shares or more, right? That's part of, your montage. Then there's different buy buttons, right? Do you want a market order or a limit order? Do you want to short a stock? Do you want to sell your stock and then, stop losses and things of that nature? So this is like your order platform. So what's on here? So the number one, you have your ticker, right? You have your ticker. So this is that. Ticker is essentially like a Best Buy or Microsoft. Rather than having you type it in the company, all companies have tickers. And so you're going to use that ticker and to figure out what you're going to buy. Ford Motor Company, right? So on and so forth. And then the number of shares. How many shares do I want? Do I want 1,000? Do I want 150? Do I want to buy a stock or sell a stock? Type of orders. The two most commonly used options are limit orders and market orders that we'll discuss in a second. And then you have your execute button. Once the components of your order have been filled, you need to tell your broker to execute the trade. So, you've got, okay, I want to buy XYZ at market, right? Boom. Or I want to buy XYZ at limit, so on and so forth. Boom. So that's your execute. And then at that point, you'll have an orders box where it'll show like, okay, your orders went through and you own this stock now. Buy and sell order types. The two most commonly used are market orders and limit orders. A market order tells your broker to buy or sell the specified number of shares immediately at the price of the stock that is currently trading. It does not specify an exact price. So essentially when you hit a market order, you're saying wherever the nearest seller is with the number of shares I need, I will take it. I'm not going to bargain. I'm just going to take it. The thing to remember about the market, guys, is the stock market is essentially just a giant auction of people. And so it's like a big bazaar. And so you have to have buyers, and then you have to have sellers, and at some point they have to come together and meet in the middle. And that's how a trade is made. And so there's different types of orders to come in and execute the trade. When you have a group of buyers and a group of sellers, if a guy is only willing to sell at 20 and you're only willing to buy at 18, you may not meet for a trade till the price of the stock gets to where you want. But at that given moment, you can't, okay? Because you have a limit on it. And so at some point, you need somebody to lower the price of their stocks that they're selling to match what you're willing to pay, and now a trade can be executed. Or you, at 18, have to say, you know what? I'm not willing to pay 20, but I'm willing to pay 19.75. So let's see if that entices him to sell. And maybe the guy at 20 is saying, you know what? Good enough for me. Take my shares. So a limit order specifies limits on the price at which you want the trade to be executed. A buy limit order for $5.50 tells your broker to buy X stock at $5.50 or less, establishing an upper limit for how much you're willing to pay for that stock. A sell limit order tells your broker to sell X stock for $5.50 or higher, establishing a lower limit for how much you're willing to sell the stock. Short selling, right? Short selling. So for those of you guys that have seen me trade, half the trades that I do are probably short sells. Short selling is kind of one of the things that retail traders and investors never know about, and it's so important to learn. And I learned the lesson of this, in 2008. My dad is a great guy, a simple blue collar type of guy from Michigan. He works at a computer company, and same company since 1981. Like just a loyal guy through and through. And his retirement mantra always was, I'm going to go to school, work hard, take care of my children. My company's going to take care of me. My retirement, I want company stock so that, I'm a part of it and they're a part of me. And that's where my retirement is. And so, my dad is old school like that. And in 2008, he worked at a company called Unisys. And, at the time, Unisys was, the stock price of it was, it got up, it was pretty high. And then, once the market started to change, it was all the way down. And so, you learn something there. I was telling my dad, because I was trading at the time, like, get rid of this thing. I'm like, actually short it. He's like, no, I can't sell, the shares in my own company. That'd just be wrong, like whatever, like, I'm into thick and thin or whatever. And I'm like, well, then short as many shares as you own just to even it out. And, he didn't really understand the concept of short selling. And so he's like, I saw a scam or whatever. And it was really, I saw it go down live like I didn't care in the end because I was like, I'm always going to take care of my parents anyway. So, like I was like, oh, stubborn old man, whatever. And so every day though, we saw this thing go down and it was like just a hair-raising thing because, at this time I'm in my 20s and it's not like I'm like some multimillionaire at the time either. And we're like, holy shit, like I thought maybe this thing would drop like 20% or something and it just drops. And it dropped some more. And it dropped some more. You can see like really the meat of the move. It was at like 50. I mean, it would drop from 100, but it was at $50 here. And it went from, this is a span of like 3 months to $3, from 50 to $3. And it was an amazing thing to see because my dad was telling me about it. He was like, at the end of it, we were looking at you like, holy fuck. And we looked at it and he's like, so shocked. And what do you say? And he's like, he gave me important lessons. Man, it took me 25 years to make that money. And it took me 3 months to lose it all. And that was it, right? Like the $100,000 or $200,000 he had in company stock was worth what? The price of a Ford Taurus, not even a Kia Sophia, probably. And we laugh at it now because it was like really it was a moment that changed both our lives. When first it got my ass in gear to get to work because now I got some parents to support here. But for him too, like, wow, everything I had been told was a sham. Like, here I go. Like, and they fired everybody at this company. They kept him on, thank the Lord. But I mean, they fired all his friends and everybody he knew and all these people that were entrusting of this company. And, you look at it and say, well, you're so helpless when this type of stuff happens. But there's a whole nother side to trading that gives you back the control when the markets get like that. And that's called short selling, meaning that you can actually bet on stocks to go down. Like you see some stock that's going to go down and you have a low risk entry point, you can take that turd down. And that's so huge. That is so huge to have that tool in your tool belt for when the time comes, because markets don't go up forever. They go up over time. Yes, the population of the world grows. Markets are going to grow too. But once a decade or so, you're going to get this crazy year. You're going to get a year where things just go out of flux. And so to have a tool and to even know that you can do it is really important. And that's called short sell. And so a short sell is essentially just the opposite of a buy. Rather than, buying a stock and selling a stock, initially you short a stock, meaning that you short sell a stock. So you sell first and then you buy second. Okay? So like say a stock's at 100 and you short sell it there and it goes to $90. Then at 90, you're buying those shares and now you're keeping that $10 difference. So it's just a reverse order. And the parameters of it are really easy. I mean, when I'm trading, can't tell the difference between short and buy. All they are is buttons. I want a stock to go down, I just hit short. I want to buy the stocks I think is going to go up, I hit buy. There's not too much more. Of course, there's micro parameters in there in terms of how it all works, but who cares, right? In the scheme of things, They're just buttons. Shorting is just the opposite of buying, okay? And it's an important tool to learn. Even in this market this year, you know, one of the things that you'll notice about like even a market like the market that we're in now, the market has been flat the whole year. The market's been flat the whole year, meaning that it's been without trend. You can see the price of the market is essentially the same all year. And so when the market is flat, there's pocket of opportunity to buy stocks and then they go up. And then there's just as many opportunities that, you know, stocks that stink, that they go down, right? And so in a flat market where the market's not either up or down, you have to find individual stocks that may be going up, and then there'll be a lot of individual stocks that are going down. And so you need to be able to play things both ways. And so like in this particular year, I probably would have made no money if I could only go long stocks, because on any given day, the market might be up one day and it's down the one day, up one day, down one day. It's an absence of trend. Day trading. Day trading is when you buy and sell a stock within the normal market hours of one day. That's a day trade. The SEC places limits on day trading, as do most brokers. The most significant of these restrictions is the requirement that you maintain a minimum account balance of $25,000 if you plan on making more than 3 day trades in a rolling 5-day period. So the cost of doing business for day trading is very high, okay? One of the things that I ran into when I was newer was this same thing. And it's kind of the rite of passage for traders to kind of get over the hump and build up their account to 25,000. When I talked to my mentor, I was like, dude, is there any way around this? He goes, yeah. Get good at swing trading, which means you're holding stocks more than one day, and build up your account to 25,000. I'm like, dude, I only got $2,000. He's like, well, it's time to get to work, right? And that's the rite of passage to kind of do it. Now, of course, there's some ways around it, and the most one, like when I was a kid doing this was, you know, I'd keep like 3 different accounts with a few $1,000 in it, so that if I did see a day trade, I could take it and I'd have a few different accounts to do it. But the essential is on any given account, less than 25,000, you can have 3 trades. If you go to number 4, you're going to get basically a day trading equity call, meaning they're going to ask you to put in enough money to get to 25,000 so you can day trade again. Or what you got to do is have a few different accounts, right? And so there's no really ways around this. This is the rite of passage. There are some offshore brokers and things like that that people can go to. I haven't used any of them. Me and my students, we trade in a hedge fund where we pool capital and resources and things like that of mine so that they can trade. But, you know, besides that, you got to go out and do this the old-fashioned way and build it up. And it's always kind of when you're looking to see what kind of trader you are, that's really important. Is, you know, unless you can find a firm that, you know, will back you as a trader and, you know, that has a group like that, you just got to go out and build it up, which is the rite of passage for traders. Mary Beth used to give me the same thing. Mary Beth is, you know, at the time, now she's a pregnant married woman, so she's a new type of terror. But back when she was in college, she was playing college basketball at Mississippi. She was a different type of terror. And her thing always, like, you know, because she started with like a $10,000 account, was, how do I get around this rule? And I was like, there is no way. How do I get every day? I can't believe the government puts this rule on me. And being from Mississippi, she don't like the government at all anyway. So there's always like, I can't believe the government's doing this to me. You know, that was her thing, right? And I kept stressing to her all the time was, this is Big Willie over here. She's awesome. She's like a badass. She's much better at surfing than I am, unfortunately. But that was the rite of passage, you know. That was the rite of passage, you know. And so, you know, we had to, you know, work at it. Hey, we're going to have to get this thing above 25,000 before you can day trade. At this time, so many years ago, there were no other options. You just had to do it, you know, and so that's just part of the game. But how we trade and why? How we trade and why? So the Bulls on Wall Street method. We are primarily short-term traders. Our goal is to profit from a stock and then move on to other opportunities, as there are always stocks making big moves. So why hold on to something that isn't making you money? And so I think this opportunity cost of life is really important, in that and this is with anything in business or life in general, I've learned this in business too, is that if it's not working, probably something wrong with it. I'll tell you, when I'm trading stocks, most of my picks work right away. Why? Because the method that we're going to learn is about not just picking the right stocks, but about timing them. The timing is just as important as picking the right ones. And so when you're in them, they should be working. And if they're not, it means you either picked the wrong stock or you mistimed it. But either way, out of one of those two, you've made an error. And so a great trader recognizes his errors right away and moves on and corrects them. Bad traders, they come in and they refuse to admit mistakes, to recognize when they're wrong, and so they hold on, and then something bad happens, right? And it goes off the books. So that's really, really important. When you're looking, at trades, I always think about that. Now, if you're an investor, it's totally different. If you're an investor, it's totally different, meaning, okay, I'm looking at this in a 2-year time frame. Yeah, I may buy a stock. It's not going to do anything for 6 months. But when you're day trading or swing trading means you're holding stocks for, say, 2 to 14 days. When you're holding stocks for 2 to 14 days, well, guess what? You don't have that many days. If it doesn't start working for you, guess what? On any given day, there are tons of stocks that are making explosive moves. And so there's that opportunity cost of it. And I think that's really, really important, in that, look, any given day, you got a lot of stocks. You got a lot of stocks here that make big, big moves. And so you never want to just say, okay, I'm going to be stuck in the stock, because on any given day, there's a stock that makes a 40% move or a 30% move. And when we're learning what we're doing, it's all about timing and getting into these stocks. Don't sit on it. And there's a hopium. I was just talking to one of my students, Aggies, Agnes Woods, amazing young lady, great potential. She actually made $25,000 her first 5 months trading, and then she started losing it because she started breaking her rules. And so when I saw her last week and we had lunch together, you probably see it on Instagram stuff, right? I meet up with students pretty much every day. We were having lunch together. I said, well, what's going on? You started off so hot. Making $5,000 a month for 5 months is a good start. She's like, it was. I was really excited. And then things changed. And I go, so what's been your issue? She goes, I have a problem with hopium. I had never heard that term before. I said, hopium? She said, yeah. Sometimes when I get in the wrong stock and I know it, I hope that it goes up. That's a little bit against kind of what we've learned about trading, but I've done it too. We all hope, right? It's like, oh, please let this one work out for me. I'm so stupid. Why did I do it? But a good trader cuts it. Hopium, when you pray for a stock to go up and down, right? You've taken all the control out of your hands and into the hands of the gods of stock, the stock gods themselves. And they never look kindly on people like that. And so move on. Every single day, ask yourself, if you got $20,000 and your stock is just stuck for days and days and days, and then you see a pattern like this stock, and this is like what we call a flag pattern. And we're going to learn patterns in a couple days, but it's like a flag pattern. You see this stock and its flag pattern. You've got this dead stock, right? Even though your dead stock may not be losing you money, by not actually going and switching some money over into your next stock, right? There's that opportunity cost. So that's really, really important. Admit your mistakes, admit your mistakes, admit your mistakes. Always do that. I have, I have my students make some mantras of like stuff like this. Like I have my own, right? And it's like mantras, like laminated, baby, of like things that I have to remind myself of. And, that's really one of the ones that gets new traders a lot is that hopium of like the refusal to admit the mistake and move on. So we don't buy or sell stocks just because of what somebody said. Jim Cramer, Warren Buffett, the Wall Street Journal, your neighbor. Everybody has an agenda, and following anybody blindly is a great way to lose money. Same thing with trading gurus. Same thing even if you're looking at me. I am the man. There's just no getting around that. Certain types of day when I'm trading, I feel like the man. In my regular life, I'm just, a semi-good son, a semi-good brother, and trying to be better at all of them. But when I step on that trading floor, I always feel like I'm the man. But that doesn't mean that you just sit there and follow me blindly or Jim Cramer blindly. Everybody has an agenda. Everybody, right? Everybody has an agenda. Nobody can be trusted with your money more than you, right? When I'm trading, I'm thinking of my account and my strategy and how I'm going to make money on this, right? You may have a different size account and different type of risk parameters and different types of things. And so what I'm doing and you're doing is not always right in sync. I may be trading $200,000 account. You may be trading a $2,000 account. So if I say I'm going to buy a stock at 20 and this is my risk, that may be a lot more risk than you can take. So don't blindly follow anybody because nobody has the same situation as you. Nobody has the same work situation, same family situation, the same size bank account, the same size experience. I tell my guys, like when they come in the chat room every day, listen, I'm going to give you some great ideas. I'm going to make some great trades, and you're going to get a little bit nervous because when you're not in them. But you don't want to just follow me. What you want to do is learn. Learn so that you can trade along with me. So that when I say, hey, check out this stock or check out that stock or whatever it might be, you're sitting there and you're able to trade along with me. Trade along with me. And that's really important. Like you can see here in the chat room, like I put in all my alerts and I'll post my P&L for everybody every single day. And you see the trades I'm taking and they can follow them. But look, I'm in and out and I'm trading all this a different type of volume than most people can. And that becomes really, really important. Like, hey, not everybody is going to be able to follow along and trade exactly the same way that I do, right? And so, you want to use me for is an idea generation, a learning tool. My students come in there and they can watch me on screen share and all that fun stuff, and it's for learning, right? Don't just sit there and blindly follow anybody because it's not going to work like that. Nobody can do that. So don't do that. I made this huge mistake of doing that before too, which is thanks, Donald. Appreciate it. So cheap stocks. Hoping that someday you're going to find the next like $2 stock that becomes the next Google it's a pipe dream. Most stocks are cheap. 3 pennies, 4 pennies, 5 pennies for a reason. They're often low priced for a reason and may never increase in price. Mostly all the stocks that you see that are $1 or $2 are that cheap for a reason. They suck. Okay? So don't miss the weekly and daily opportunities to make money because you're hoping that the next hot penny stock is going to become the next Google years from now. We are technical traders, and that means that we rely on stock charts. We rely on stock charts to make all our trading decisions. And the information provided by stock's price for buying and selling decisions, fundamental analysis, studying balance sheets, management rosters, and PE ratios and other details about a company is not necessary or helpful for short-term trading. So look, we've built our foundation now. All right, I've given you a little bit of kind of juice of what we do and why. Now it's time to dig in and really get into the nuts and bolts of things. Okay, so what's technical analysis? Technical analysis catalogs market data and establishes a system for finding trade ideas, picking entries and exits, and managing risk. It recognizes these key principles. The stock market is a giant auction. It's made up of people, okay? And technical analysis is about understanding the motivations of market participants and how those motivations never change. The beauty of the market being about market participants is that people throughout history exhibit patterns. They exhibit patterns in that when faced with certain situations, they always do the same thing. Throughout the beginning of time, people do the exact same thing. And so when you're looking at the market, understand that human behavior has always been the same since the days of Adam and Eve. And so you can predict what's going to happen in the market because when you see certain patterns in the market, you'll be able to reasonably predict what's going to happen next when faced with the same scenario. And so the market is governed by that supply and demand. Technical traders rely on stock charts to make their trading decisions. This can be contrasted with fundamental analysis traders who primarily use information about companies to make their trading decisions. So there's fundamental guys that rely on what's going on inside a company, and then there's technical traders, which is what I am, which I use the charts. I use price action, real data to reasonably deduct what could happen next. Now, let's take a look at a way to get some stock charts up. So I use this tool. This is called TC2000. It's made by Warden. Pretty cool tool, but you have to pay for it. They have a free version that you can all use that's got almost all the features, but not all of them. So go on freestockcharts.com. We'll set up some of this stuff. All right. So I want you to go on here, and I want you to just set up a new layout. So your chart's going to look like this, all right? Now, let's just pull up a ticker of something, type in like AMBA, right? This is a stock we trade a lot. AMBA. So hit up here and type in AMBA. Okay. Now, you've got all this stuff here. So we want to change around some things to get your charts to look like mine, right? To get it to look like this. So first thing I want you to do is change it where it says 10 minutes. I want you to change this to daily. Okay, so it's going to look like this. Now make this a little bit smaller over here. All right, and now I want you to add a few different things to it. Where it says here, add indicator, type in moving. See where it says average? Type that in. I want you to type that in 3 different times. Moving. And hit add moving average to price history. Hit it again. All right, so we got 3 of these bad boys. Now we're going to change them around a little bit. So the first one, I want you to change this where it says period to 20. Now the second one, I want you to click it, hit edit, Keep it at 50, and I want you to change the color. We don't want the same color. Make it like yellow. Yellow is nice. All right, so now you get 20, 50. Now this one is 200. So edit it, make it 200. Turn it to like a pink, and you're good. So you have 3 colors. You get 20, 50, 200-day moving average. So this is your charts, guys. These are your charts. It's pretty cool. So when you're looking at stocks and all that stuff like throughout class or when you're doing your homework, I want you guys to really practice looking at charts a lot. And the reason for that is recognition. So you're looking at things right now and throughout this class, and a lot of it's going to be confusing. Some of it's going to be like a little mumbo jumbo. You're like, what's this guy even? What does he think he is? What's it all about? I don't get it, right? It's just these things. But what happens is, as you look at more and more charts, your eyes will become trained to it, and it will become like second nature to you on looking at these things and figuring out what it means and what it does. Right now, it's just going to look like Chinese. Unless you're Chinese, then it's going to look like North Korean or whatever, right? It's going to be weird. But as you look at more charts over time, it could be thousands of charts. Things will be like second nature. Like when I look at charts, like, you know, you see me like when I'm trading and stuff like that. Like I do this. This is how I look at charts to find what I like. I mean, it's like just 1 second it takes, you know. But the reason for it is, you know, I've seen so many charts, right? I know exactly what I'm looking for, right? I know what I'm looking for. Like I know that I like this, you know, and I know I like that, and so on and so forth. So these are very, very important just to get the repetitions in so that you can do that. So now you got this. Now you got moving averages. You just leave your volume the same. Now I want you to add another one that's called stochastics. Don't worry about what all this stuff means yet. We're going to get into it a little bit later. So when you hit stochastic, I want you to hit this yellow button. Five. Leave everything else the same. Then this blue one, I want you to change this to 3. All right, don't worry about what all this stuff means. We're going to get into all this fun stuff. But now your chart should look like this. Pretty cool, huh? So, when a technical trader views a chart, what is he looking for? Essentially, we're looking for patterns of supply and demand. Actually, even before when we get to this point, let's look at this real quick. All right. So, what does all this do? All this stuff. Okay? Each one of these things that you see here, these are candles. Okay? What does a candle represent? A candle represents the movement and the price action of a stock on a daily basis. Okay? So for example, this AMBA closed on Friday at $108.62. So what's this? Okay? Well, this represents the range of a candle. This is the low of the day. Okay? The stock got down this low during the day to 107. 110 is the high of the day. Okay? Now, this 108 is where the stock closed for the day, and this 109 is 109.55 is where it opened. So essentially what it's saying is a red candle means the stock is down for the day. Red candle means the stock is down for the day. Okay? Green candle means up. When you get a candle that's solid in color, versus hollow. Solid in color, it means that the stock closed lower than it opened. Okay? Closed lower than it opened. So the top of the candle is where it opened, the bottom of the base is where it closed, and then these two tips are the range of the stock. 110 to 170. So you see a story on this stock for the day. That the stock was closed at 108. It opened at 109. It got up as high as 110 and it got as low as 107. Right? So like if you were looking at this stock on an intraday basis, like if you're day trading, you would see that same story. This is what the stock did on a day trade. You know, if you were day trading, this is what you'd be looking at. This is what the stock did during the day. These are 5-minute candles. So your daily candle is essentially the story for that day over the course of one day. Okay? When you're day trading, what you're essentially doing is, you're taking the ideas from this and then you're zooming in on a smaller term time frame, which we'll get into a little bit later. I won't worry too much about now. So a green candle, right? Green candle like this. What does this mean? Stock's at 112. Closed at 117, so it moved up $5. It got as high as 120, and it got as low as 112. And I love trading this stock because look at the range on it, right? The stock can move freaking $10 in a day. It's awesome. Like imagine you're trading even a few hundred shares of this bad boy, right? There's money in that. When stock moves like this, there's big, big money in it. Big money. A big part of our job, a big part of what we're going to do, okay? As traders, remember this, is that we have to be in the best stocks. Our moral imperative as traders is to be in the best stocks, the best moving stocks for our particular strategy. So for my strategy, which is about following trends, I want to be in the hottest stocks, the ones that move the most, right? I want to take big, big, fat chunks, fat stacks out of stocks. And so that means that the stock has to be able to move. Okay, and just go on a little tangent here, but right, you look at like a stock like GE, right? GE is awesome. Everybody knows what GE is, but see, right, what does GE do during the day? Goes from 256 to 26. So what's its range? 50 cents in a day, right? This is what we call a grandpa stock. No offense to any grandpas out there. I love my grandpa, but right, one of my grandpa trades too, and I was telling him like, Grandpa, maybe you should stick to the slower stocks because he loves like Bank of America and GE. So that I start calling them grandpa stocks. And my grandpa loved these things. And I'd always be like, so my dad trades, he's awful. My grandpa's okay. And then I'm pretty good. And so, when we all sit around the table, it's like we're all like talking about different stocks. My dad's always in the wrong ones. My grandpa's in the right ones, but he picks the slowest moving ones. And then I'm the wild man. So what do you see about GE? 50 cents, right? 50 cents. As traders, we want to be in the hottest stocks. We want to be in the stocks that move up, right? Like a stock like this. I mean, we hit this thing in our chat room at like $3. Now, I didn't get to keep it till 56, but I wish, right? We want to be in stocks like this, right? We want to be in stocks that can move. And so remember that when you're looking at, stocks and trade and things like that. But let's get back to what all this stuff means. So these are your candles. So green, a hollow candle means that the close is higher than the open. And your tails are the high of the day, the low of the day. If you got a solid candle, it means that the close is lower than the open. And then these are the high and low. Now you can get a solid candle even on a green. A stock can be up for the day, but it can still close lower than it opened. It just has to be higher than the previous day. So those are your candles. Now, I don't do any specific candlestick analysis. I like using candles because they look nice on the charts. They're easy to read. And that's the extent of it. There's not too much more you have to do on it. Now you have moving averages, right? Moving average. Moving averages act as support and resistance levels, which is something we're going to learn in a hot second. And also they help you identify trends on particular time frames. Okay, so like your 20-day moving average is your average of the last 20 days, give or take some specific definitions. All right, but that's the gist of it. So that's your short-term moving average, because taking your average of the last 20 days. So if you want to see like your short-term trend of the last 20 days, you look at the 20-day moving average. And the slope of that moving average will tell you if the trend is up or down. Easy enough, right? 20 days rolling over, your short-term trend is down. Your 20 days pointing higher, short-term trend is up. Your 50 days, your intermediate-term trend, and your 200-day moving average is your long-term trend. Pretty cool, right? And then the other thing that moving averages can do is they can often serve as support areas. Areas where stocks come back to before they make big rips. You know, they can be zones where fresh demand will come in to stocks and propel them higher. So they act as support, like they come down and then they bounce up from those areas, okay? Now, it doesn't mean they always do it. In trading, there's a few different things that you look at when you're looking at a chart, okay, that we're going to cover over the next few days. Number one is when you look at a chart, you have to look at it as like you're a lawyer, okay? You have to look at it as like you're a lawyer, meaning that you have to build a case when you're looking at a stock. Every stock, you need to build a case. You have to compile pieces of evidence in your favor to say it's worth your time, right? So like as a lawyer, what do you have to say? Like you have to prove beyond reasonable doubt, you know, for somebody to be guilty. A stock is the same way. It has to prove itself to you that it's worthy of your capital. So when you're looking at a stock, you have to take everything into a whole context. So the most important thing on a stock's chart is number one, its price, okay? Number one, its price. Like we trade trends. One of the things that happens that you'll see that the easiest money that's made in trading is the ability to ride a trend, okay? When you have a trend, it's much easier to get in a stock and actually make money versus like if a stock has no trend or it's just sitting around, like what do you do with it, right? What do you do with this? Like it has absence of trend. It has nothing going on. And so when you have stocks that just sit around, like where is your edge? Like if you buy it, how do you know what it's going to do or where it's going to go? There is none, right? There is none. And so in absence of trend, when you just get a stock that's stuck around, guess what? There's no advantage to buying it at all. Unless you're an investor and you have some inside scoop that this thing is going to do something, there's no advantage. Where do you buy it? Where do you sell it? What's your edge? How do you enter? How do you exit? There is no proper way to do it, okay? When you trade within a trend, you have the wind at your back. A stock in a trend is much like physics. An object in motion tends to stay in motion till a force greater than or equal to is thrust upon it. So when you trade stocks that are actually trending, what will happen is that the short-term price corrections within the context of the trend tend to resolve themselves in the direction of the trend. But you have that wind at your back of saying, okay, if I can get it at the right level, this stock tends to go up, okay? And so you want to be focused in on what? The stocks that are building, right, those kind of trends. And there's always a whole host of stocks that do that, okay? But when you sit there and just pick some big piece of crap that does nothing, that's a whole different ballgame. We want to be in these stocks that are trending. But if we get something that's not, what's our edge? What's our advantage? You know, trending, some of the biggest mistakes I've made in my career have been because I bought stocks because I thought they were cheap. I bought stocks as I thought they were cheap. You know, I've seen so many stocks over the years, you know, where, you know, you think they just can't go down anymore, and then they keep doing it. You know, I saw this, you know, with like the solar stocks and stuff like that. I mean, let me tell you something about stocks. If you buy something because you think it's a good deal, save it for Walmart, right? Save it for Target, baby. Cheap works in retail environments. It does not work in stocks. Stocks, when they get cheaper, just tend to get cheaper, okay? There is no bottom often. Often, wherever you think the bottom is, it's beyond that. Look at this. I mean, we used to trade these coil stocks. When I first started teaching boot camps, our trading boot camp, our first boot camps, these things were like the hottest stocks around. You know, we were trading like these coal stocks. They had gone on this epic run from 2008, you know, to 2011. 2 years, right? They just go on these epic runs. So, but then look what happens. They turn around. Now look at all these stocks that were $100, right? Look at this thing. This was like one of the best coal stocks in the history of the world. Freaking things at $1, right? And I mean, most of the ones that we used to even trade, they're all out of business. Like Patriot Coal, this thing was the hottest thing around. Dunzo. It's not even around. It's at 0.004. WLT was, you know, just this amazingly. This was like, WLT was one of the best trading stocks around. Like when, you know, when we were sitting back way back in the day, we're like, man, we want to put our, you know, we want to get a good solid portfolio type of stock. You know, people would always talk about WLT. You know, stock went from like $11 to $150 in a handful of years, and then look, it rolls over. And this is what happens when you go the opposite of a trend. Okay, you sometimes can never find the bottom. Okay, sometimes you can never find the bottom, and so going against the trend and just buying stuff because it looks cheap is the quickest way to lose everything that you've ever had. I lost two of my first accounts doing the same thing. I did it in the telecom bubble. For some of you guys that remember this, Lucent Technologies, Nortel Networks, Global Crossing, you know, these things were like $100, $200. And I was buying them at like $5, $6. I thought I got a great deal. And then they got down to like 50 cents, 40 cents. I had nothing left. You know, cheap gets cheaper in trading. There are instances where things can rebound, but there's a certain set of principles that you need to see before it can happen. Like I can find a bottom in a stock, but sometimes stocks don't have a bottom. They have to actually make a bottom. And bottoms are processes that often take months to years, where they level out and then they finally come up. They don't just happen, okay? Your stock is in a downtrend, stay in downtrend until it gets very, very low, so there's nobody left to sell it. So stay away from that stuff. It's one of the best pieces of advice I can get you is don't go and buy something because you think it's cheap. Cheap gets cheaper. So when a technical trader views a chart, what's he looking for? Essentially, we're looking for patterns of supply and demand, which can indicate what direction a stock is likely to go to. Technical traders refer to these supply and demand levels as support and resistance. Support and resistance are areas of demand, supply, where a stock's current direction is likely to be reversed or temporarily halted. For example, if a stock has a history of moving down to $5 and bouncing higher, we may watch that $5 level as a place to buy the stock in anticipation of it bouncing higher. Resistance is when an ascending stock reaches a point where the supply of shares exceeds the demand and its upward price movement is halted. That's resistance. Support, when a descending stock reaches a point where the demand for shares exceeds the supply and its downward movement is halted. That's support. Stocks tend to travel around between these support and resistance levels, okay? So think about this. You'll often see in stocks battleground levels. Battleground levels in stocks, and those levels, when you break over them, you can set them off, and they can go on big, big runs. And so, like, you'll see, like, battleground levels in stocks where they're, like, just stuck for long periods of time, where they hit the level, and they hit the level, and they hit the level, and every time it hits the level, it comes down. But after you hit a level a certain amount of times, after you test levels a certain amount of times, and usually it's 3 times or more, when you break over it, you can get very, very big runs. You can get the explosions. That's what's called a breakout. A breakout, if many of you guys have heard it, a breakout means when you buy a stock, right, and it explodes, right, because it's breaking over a level of resistance, okay? That resistance is holding it down. Think of resistance as a pressure cooker. You're holding it down, and you're tapping that area, and you're hitting that area, and you're hitting that area of resistance, and every time you hit it, you're beating on a door, and you're weakening it. You're weakening that resistance level so that when you thrust above it, you get this explosion. And that's what's called the breakout, and that's the essence of everything that we do as technical traders. We're looking for these areas, these inflection points in stocks, where when we buy, we can get explosive movements in short periods of time. And so you need trends, you need levels of support, resistance, and those are the things that can launch stocks, right? And so when you're looking at these things, same type of deal, right? You see this like type of thing that we trade all the time, right? Exxon. You've got a level here, right? So when you hit a level, and you come down, you hit a level, and you come down, what are you building here? Do you have a line in the sand? A line in the sand that's holding down this stock. And so when you finally bust through it, you can get these explosive movements that thrust up a stock. We'll get some better examples. Let's hold on. So look at this Exxon, right? You've got a line in the sand here. A line in the sand here where you test it. And so at some point, a stock gets so extended that it just comes back down, okay? It gets so extended, it comes back down. I use a stochastics indicator. Stochastics essentially means that when you get a stochastics indicator above 80, right? That means that the stock is overbought, meaning that it's getting a little bit extended in price, that it may have to come down. And if you get under 20, it means the stock is oversold. So just a really, really simple thing. Above 80 is overbought, meaning it's a little bit extended. It's probably got to come down. A little under 20, it's oversold. It's got to come back up. Okay? Doesn't mean it happens that day. What it tells you is that, hey, it's giving you an indicators help confirm what your eyes already see. So an indicator will tell you, like, you suspect that a stock's gone up a little bit too far, too fast, right, over time, in a quick period. So your indicator will help confirm that to you and say, hey, what you're seeing via price is true. So I use my indicators to help confirm price action. And so when I see, like, the stochastics get above 80, right, I know that I don't want to be just buying this stock because it's overbought. That in the next period of a few days, it may come snapping back down because it's gotten way too extended, and then vice versa. So stock gets really, really extended, and guess what? It's got to come back down. So it comes back down, then it pops up, and it comes back down, it pops up, and it comes back down. And so what happens is every time you test a level, right, you weaken it. You weaken it. You're knocking on that door, and so you test and test, and it's usually the third test that can get a stock really, really going, okay? 2 tests, you very, very rarely see a break of resistance. Remember that. 2 tests are for losers. 2 tappers are for losers. 3 tappers for winners, okay? 3 tests or more, for breakouts. And this is also true when you're day trading. 3 tests or more. You're beating down that door, and then when you finally get over it, now you got something. See this, Amber? Test, 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 test. You finally break over it, that's when you go, okay? There's a lid on the stock. There's something holding it down. And so when you're beating on it and you're beating on it, at some point you break above, right? Now you're in a supply-free zone. See how there's no candles up here? That means that there's no price up there. There's nobody that's previously bought that stock up there. So there's nobody there to sell. There's no old supply there to sell you. And that becomes huge. Remember, the stocks travel between support and resistance. So what you'll have as stocks travel back and forth, price has a memory. They remember the last time they were at that level, so they bounce up. And then they bounce back down, and they will ping pong around back and forth between these levels till one of them is overcome. And remember, the more times you test it, the more likely you are to break. Test, test, test. Then you break above. Our primary tool as technical traders is the stock chart. Charting allows us to see the actions of all traders in a graphical format. The most important of these charts are price, volume, and moving averages. So we were just talking about this. Why do we follow price? We look at price via candlesticks, right? That's what we put on our charts. Price is the most important chart feature. Why? Because it shows us if there's a discernible trend, right? Are we going up? Are we going down? Price also shows us how a stock reacts around key levels. But then most importantly, what price shows us is the pattern. The patterns become everything that we base everything on. So what you see here is a flat top breakout. That's a pattern, okay? If you see like a, you trend the other day, this stock, what you got here is a flag pattern. And we're going to learn a couple of these in a couple of days, but as a stock makes a huge pop, this thing goes from $8 to $15. It's up 100%. You think, oh my gosh, this thing's up 100%. It's got to go down. Now, that's a bullish thing. If it goes sideways for a period of time, and it starts to build a flag, now we have a secondary entry where we can get another rip. So this is a flag pattern. So we use price to show us patterns and show us those key levels of a chart, to show us the trend. The second thing we look for on these charts is volume, which illustrates the number of shares in the specified period of time. It's the second most important indicator on a chart after price. In reality, only price and volume are the only things you need to trade. They're the only things you need to trade. Everything else we use as a confirming indicator. They confirm price action. So you don't necessarily need them, but they'll help you out till you train your eyes. Like, you'll know when something is way too extended. But when you're new, you need some context. And so stochastics will help you when you see something above 80, right? You know it's overbought. You can just say, hey, this is a little too extended for me to buy. When you're looking at volume, every corresponding candle has a corresponding volume, right? So you'll see on this one, the stock did 1.3 million shares, and it was up $5, right? These days it was down. These are the volumes. It traded X amount. Liquidity. One of the important things that stocks will show you on the volume is the liquidity, okay? If you trade illiquid stocks, you have stress. Because what is liquidity? It's the ability to get in and out of a stock. easily. Imagine like you're like a mom, right? Or a dad, and you're a stay-at-home dad. I've got a student of mine, Oscar Fuinhas. Oscar is the man. Oscar is a stay-at-home dad to 4 girls, okay? So he's a young man. He's like 37, 38 years old, and he's got 4 daughters. I mean, imagine how nutso this guy's going some days, right? And he's got to dump 10,000 shares of a stock in a hot second. He's got to go pick up his kids at school. So if he's trading something that has no volume, say it does 100,000 shares of volume, is he going to be able to get rid of his stock easily in a hot second? Like, right? The ability to get rid of it in a second. Well, no. If you do 100,000 shares of volume, you want to get rid of 10,000 shares. That's 10% of the volume. You have to have a buyer ready to actually, right, take your shares. Doesn't happen like that. Where versus, you know, you have some stocks with a lot of volume, right? They're more liquid. Like we try this Fitbit a lot. It's a more of a liquid stock. You know, it does 10, 15 million shares some days. It's just much easier to get in and out of because you have the liquidity, okay? So I think a minimum of 500,000, you need to really trade a stock. I personally, when I'm day trading, will do $1 million or more. When I'm swing trading, the liquidity is not as important because you're holding a stock for many days. You have many days to get out, and the actual penny by penny doesn't matter. In day trading, every single penny matters because when you have 5,000 shares of a stock and you have a 10-cent better entry or a 10-cent better sell, it's 500 bones. 500 bones, right? Adds up every day. You don't think it means anything, but every day that 10 cents, that 500 bucks adds up to a lot of money. So those pennies matter when you're day trading. Versus in swing trading, you know, oftentimes I wouldn't ever have 5,000 shares. I probably have 200 or 300 shares because I'm going for a much bigger chunk. And then relative volume. Relative volume means volume more than the average. The hottest stocks, the stocks that make big, big, big moves, they always have high relative volume. They're expanding volume. A stock does 1 million shares a day, and then out of nowhere, right, it has something go on, and then the volume starts to pop, right? That's very, very important. The volume, you know, stock's doing almost nothing in volume, and then boom, the volume comes in. Very, very, very important. You need that expanding volume to lift stocks up. Stocks cannot make explosive moves without the volume. They can at times, but if you don't have the volume to confirm it, oftentimes that means that the move won't hold, right? The volume adds validity to price movement. The volume adds confirmation of the price movement, and that's very, very important. Moving average, right? A moving average takes the closing price for the last X period of data and averages it and draws a line on it. So like we were talking about, your 20, 50, and 200 day. It helps identify trends, and it helps provide support and resistance areas. Remember that, like, when we look at moving averages, we don't just, because it's at a moving average, just buy or sell or do whatever, okay? Everything that we do when we take a trade is about building a case. To take a trade in a stock, for it to be worth our time, we want to be building a case, meaning that we need to have price pattern, check. We need to have this, that. And so you're building essentially a case for a stock for it to be worth your time. See, in trading, everything's a 50-50 shot. Stocks can go up, stocks can go down, right? You can win, you can lose, buy, sell. It's a zero-sum game. And so how do you get from a 50-50 probability to something more in depth, something that's a higher probability? You have to build your case, right? You have to have a price pattern. You have to look at your volume. You have to look at your moving averages. You have to look at your stochastics and say, you know what? The stochastics are overbought in this case. I'm probably not going to take it. It lowers my probability. versus, okay, hey, in this case, the stochastics are showing that it's not extended yet and the pattern looks great, I'm going to take it. Charts. All right, we already went through all these. Sorry, I mismatched some of the order of these things. In this class, we introduced some important facts about the stock market. Tomorrow, we're going to start digging in a little bit different. We're going to cover trends. We're going to talk about chart patterns. Dun, 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 dun. All right, let's open this thing up to questions. Be gentle with me. All right, I'm losing my voice. No, I'm just kidding. I'm ready for you. I want to see what you guys got. Hey, Jason, man, you want to get your buddy over here? Let him over, baby. Shit. All right, let's open this thing up. What you guys got? I'm in Destin, Florida. A few people asked. I'm in Destin, Florida, which is in the Panhandle. Hey, Jason. So, guys, what I'm going to do is I'll read off somebody's question and then I'll just answer it. And so, Jason Francis, how you doing, buddy? Jason asking if you have any experience with Thinkorswim. I do. I got numerous Ameritrade accounts. I personally don't like Thinkorswim's software. I find it a little complicated to use. I have probably 600 students though that they like it for their charting and stuff. None of them trade on it, but they have a paper simulator and you can use their charting. I have like tons of students that use it for that. Hey, Sharon, how you doing? Sharon, Sharon's asking, like, what do you think about these online brokers, like Robinhood and stuff like that? Sharon, it doesn't hurt to try. You know, Robinhood, like, isn't it owned by Google or some shit? So, I mean, right, what's wrong with Google? They already own the rest of us. You know, if you're going to make some trades, and it's going to be very few, I'd try it. One of the things I suggest is, like, if you're going to day trade, it's like so hard to day trade on a phone, right? But if you're going to like do some swing trades, some investments, yeah, there's nothing wrong with doing a little Robinhood. Hey, Jason, how you doing? A good question. Dun, 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 dun. I always hear that market orders are something you want to stay away from. Are there any scenarios that you would ever use a market order? 100%. Jason, if the stock is very liquid and there's no spread, so imagine this, say a stock is at $50 on the bid and it's 50.01 on the ask. You know, if you market and it does like 10 million shares a day in volume, if you market order it, I mean, you're not going to have any slippage. There's not going to be anything wrong with it. It's going to probably save you some time. David, what is the minimum amount that you can be start with? So David, that's a question of whether you're going to swing trade or day trade. You know, they're different, different things. One of the things that happens, guys, is that the more capital you have, the more margin for error you have. Okay? When you have $2,000 and you try to day trade, 1 or 2 bad days, and you're like you're in the hole. And so what happens with new traders, and this won't happen with somebody that knows what they're doing, but what happened with a new trader, somebody that hasn't made their money yet, okay? When you haven't made your money yet in your life, the chase is on. It's always on. And so what happens is, say you have $2,000 and you lose a couple days. Now you're down to $1,500, okay? The only thing that goes on in your mind is getting back to even. I got to get back to even. So then all of a sudden, you're not trading charts. You're not trading stocks. You're not trading strategy. You're just saying, man, I got to get back to even. I got to get back to even. And this downward spiral happens. And you're busted. Because once you lose half of it, you're like so down in the dumps, you just take more gambles, more risks, you get a little bit more depressed, and all of this stuff happens. So when you start off with too low of a balance, you're more prone to that if you start off on the wrong foot. Okay? And so that becomes really, really important. I think if you're going to be a day trader, $2,500 to $5,000 is like the minimum, but the more you can have, the more cushion you'll have. I've seen some traders, so I got a whole shitload of students in our hedge fund with 2,500. They trade 2,500 to 5,000 to 10,000, things of that nature. And some of these guys that have, small accounts, they know how to make 500, 600 bucks in a day, but they don't keep it all, right? And then if they lose, sometimes they can start the gambling and all of this stuff, but you can make even a decent amount of money with a small amount, but it doesn't give you a margin of error, because some days you may be up 500, but then say that day you give it back and go negative, start you in a tailspin. And once you're in a tailspin, you don't have the backing to back you up. So you've got to do everything perfectly. So I've seen a lot of people make it out, but I've seen a lot of people fail with really, really small accounts. Hey, Scott, man, Mr. Elliott, don't worry about it, man. We all make mistakes when we trade. Sometimes that's just the nature of the game. And Jason, when you're finding a bottom, there's a whole process of things. Obviously, one of the easiest things you could do is wait for your moving averages to flatten out. That can be, a signal that your trend is flattening out. That doesn't mean you have a bottom. It just may mean it stopped going down. There's probably a whole host of other things. That's a 2-hour session in itself. Hey, Kumar, that's the nature of trading. Trends tend to stay in trends for a very, very long time till a set of events can cause it to stabilize. But oftentimes they can just go all the way back down, okay? So you've got to be really careful with that. Hey, Kumar, nice last name. I also am Desai. Hey, Duran, I keep my TC2000 like this. I use stochastics, volume, just basic stuff. I mean, I've got some different things I may do at certain times if I'm looking for extensions or stuff, but for the most part, this is like my basic look. Les Hirsch. Yes, I know. I'm sure it's spelled like that, but that's not how I like to say it. Hey, Shane, how you doing? How do you find the charts to start to analyze? Shane, first of all, stock scanning is like 1% of trading. 99, so I've taught tens of thousands of traders. I could give a trader, even somebody that's somewhat learned, the 5 best stocks for the day, and 99% of them will lose because they don't know what to do with it. Right? You can have the stock show up, but it doesn't mean you know what to do with it. We run scans. I've got a whole host of scans I run. 4% breakouts. I got all sorts of scans that I run, on any given day. But most of the time, I stick with the same basic ones. I'm looking for momentum. I'm looking for trends. It's a 3-4 hour session in itself, but always looking for momentum, trends. And Shane, I tend to trade the same stuff over. So I also have a go-to stock list, a list of stocks that I tend to trade over and over that are trending, that are in play, things of that nature. And then in the morning, I scan for PR earnings gappers, and I take those for day trades. Hey, Mark, you'd probably have to teach me how to make a handout. That is probably a little bit above my level of computers. I use simple moving averages on my daily charts, Alan. Hey, Michelle, how you doing? Good question. Are there any additional taxes associated with buying and selling stocks if you're not a U.S. resident? That is a question I am probably not qualified to give you. I would talk to an accountant. Don, I did miss the flat top breakout. Hey, Mr. Bush, Ken Bush. I personally use 5-minute. Ken is asking guys if I use 2 or 5-minute or hourly charts. I typically day trade a majority of the time on 5-minute charts. Hey, Patrick, how you doing? Patrick, best brokerage start for a smaller account, less than 2,000. If you're day trading, I would not day trade with less than 2,000. I mean, you can. You just have to know that you have about a 1 in maybe 5,000 shot of not losing at all. But, you know, once again, I mean, small things, but right, I mean, great things are done by small margins sometimes. If you're swing trading, you can have a $2,000 account or $1,000 account and start to build it up. Day trading, like you don't want to day trade at $500, right? You know, you want to have at least a minimum of 2,500. Try to get more. 5,000 gives you a lot more room for error. Hey, Dan, email me if you want to, you know, figure out what your next steps are. I'll give you a call or something, Dan Alexander. You know, there's no one-word answer. I'd love to get to know you and get your goals and all that fun stuff. So, you know, send me an email and, dude, I'll totally give you a call or have Mary Beth give you a call and I'll figure out where you are and what you want to do and I'll give you some pointers. Hey, Jeremy, how you doing? I use SMA on my daily. I use EMAs on my intraday. Hey, Mr. Holcomb, how you doing, sir? Okay. Here the question is, when looking for a flag pattern, are you looking at a daily chart, a 30-day chart, 60-day chart? It depends on the style of trading you do. So if you're looking at a swing trade, you're looking at a daily chart. If you're looking at an intraday trade, I may be looking at a 5-minute chart. Hey, Les, how you doing? Sure, let me bring it up. Hold on. So UNH, guys, Jeff has asked me to look at UNH, and you know, for the most part, it was trending for a long time, and now it's just kind of flatlined into a no man's land right now, and so you don't have really any edge as of the moment. It's trading kind of like the market. We're just stuck in this range, and so you know you can buy it, and you don't have any evidence, you know, anywhere where it's going to break out. You don't have a pattern yet for breakout or a breakdown. It's just kind of there. And one of the things to remember is that stocks, they don't have to be buys or sells or shorts. Sometimes stocks are just stocks. We leave them alone. And that would probably be the case for this. Hey, Mr. Daniel, how you doing, Ben? When you look at MA for possible support and resistance, do you look at the chart history to see if it's reacted to MA before? Yes. Bob, scanning is a many hour class in itself, but I'll give you some pointers by the end of it on getting you started. Guys, remember that I'm trying to fit as much as we can in the next 4 days. There are just certain things that just take so long that, you know, I will give you the meat of what I can. it's just, they're like things like, say, like intraday trading on 5-minute charts with certain EMAs. That's a 15-hour class. You know what I mean? And so I'm going to get as much as I can though. But so if you think I'm skating around a question, just let me know and I'll try to get you the info I can without having to dive into us getting into 3 in the morning. Hey, Mr. Holt, how you doing? Any experience with Scottrade Elite? I haven't traded with Scottrade Elite, but I have some students that have, and they haven't mentioned anything bad. If you're day trading, the price is at $7. It's just too expensive to day trade with, but I'm sure it's good for swing trading. Hey, Deval, how you doing? Deval's asking, like, how far do you go back when you're looking at support and resistance? You know, it depends on the type of trade, right? If you're an investor, you're going back a little bit farther. If you're a short-term trader, like you're going back, say you're going to hold a stock 2 to 14 days, you might only go back for a couple months. Versus if you're a day trader, you may go back even less time. Hey, Mr. Forbes, how you doing? Are you going to address tax issues? You don't have any tax issues. And the reason is till you can make a profit, you don't have to pay any taxes. And most traders are unprofitable. You know, 99% of traders pay 0 taxes. Chris, you ever pay taxes in trading?
In fact, I just take my losses and write them off.
There you go. I got one of my students are here. He's new. I just asked him. Profits is a gift, right? And so, yeah, you pay 35% in taxes or whatever, but whatever. My trading commissions are minimal. I pay 27 cents per 100 shares. You know, if I trade 200 shares at Google, I pay 50 cents in commissions. It's a, you know, drop in the bucket. Hey, Mr. Hackett, how you doing? And Mr. Forbes, there's other things you can do, right? You can trade inside a corporation, an LLC, you know, talk to an accountant, but there's a whole host of things you can do. Luis Carrillo, of course, my friend, I will be. There's nothing that you're going to need that I ain't going to talk about. Hey, Tom, I'm going to butcher your name. Just please forgive me. Wustendiak. 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 Shit. It's usually always the brown people that I butcher their names. My people. I hate doing it to a white person because you guys usually got the easiest names around. Tom, your question in terms of when I have a few trades in play and I can't make any more trades, the reason is because you do not have a margin account. If you have an enable margin on your trading platform, that will allow you to turn over the money instantly. Wian Hasu, what do you mean by market data? Adam Pasco, remember what I was talking about. It depends on whether you're trying to day trade or swing trade. You know, with swing trading, you can start with a little bit less money, but it's going to take a long time to build it up. Day trading, you can make more money with small amounts of money, but the probability of loss is higher. So you want at least 2,500 to 5,000, but the more you can have, the easier it goes. Hey, Mr. Palmier, I've got, I have it in my bootcamp module page for the students, but I have literally, you got hundreds of codes and things like that, and it takes forever. But I got them all. Hey, Zahid, I like PR earnings. Guys, Zahid is asking about my favorite chart patterns. I like PR earnings, breakouts, breakdowns. I love rubber bands. I love base breakouts, double bottom booty bounces, parabolic snapback rubbers, stuff like that. But really, a lot of it depends on what's going on in the market too. Different markets call for different sets of plays. Like something classic that I will use every day is like a flag pattern, right? And a flag pattern, I can use it in context with a PR earnings breakout or a rubber band or different things. I time them together. And guys, I also have, basically, like I have a bunch of scanners that I use on Trade Ideas. So Trade Ideas is like, you can scan for anything on this, but I've got my own, like you see, right? Bulls pullback, Bulls bounce. So I've got different, so like I got one that shoots for parabolics. These are kind of the parameters on it. I look for intraday breakdown, stocks that are basing and breaking down, stocks that are breaking down, then bouncing into resistance and then falling, breakout pullbacks, biggest gainers, top losers, and then breakout scanners. Just very, very simple stuff. The coding on it is really probably beyond, I had them make it for me. It is a little bit above and beyond kind of what you can, what I can copy and paste. But let me see here. I do have, you can download the exact settings from, let's see. Yeah, you can download the new stuff, and it's got its own charting and stuff on it too. Trade Ideas is pretty cool though, because I've been using them for a long time. They have like a million different things you can do on it. You can build a scan to anything that you ever could think of. I have, if you go on our YouTube page, I have Dan Merkin, who's the owner of Trade Ideas. He does like different webinars for us, and I have like, he's made me like all these different scans over the days, over the years. He's a badass. He's got like breakout watcher scans and different stuff that's going on. So like pre-market, I can run something like this. So I got like pre-market earnings, bullish stocks moving up fast, a sneak attack, some different stuff. But Trade Eye is pretty cool. Hey, Kumar, what's going on, man? Hey, congratulations on starting college. Kumar's coach, I'm about to start college. I'm about to double major in accounting and finance. Do you have any tips for me? Yes. Kumar, make as many good friends as you can. Make smart friends. People that are good folks that you can keep around for a lifetime. Do not get hopped up in the nitty-gritty of trying to be cool or joining, awesome frat house and all that stuff. When you're young, the people that you meet, they can be friends for you for a lifetime. The people that work for me, 4 of them actually, I have known for over 20 years. Imagine that, right? 20 years. I mean, I'm old, but not that old, right? And having a support system. When you surround yourself with amazing people, you tend to get involved in amazing opportunities. But most importantly, have fun. Take it all in. Take every single experience of it in. Don't do drugs. Don't do hard drugs. Don't do cocaine. Definitely don't do mescaline. Definitely heroin. You may or may not smoke pot once in a while. I won't judge you. Drink some beer. Besides that, have fun, make some great friends and some great experiences, and then learn as much as you can. So in trading, in business, whatever it is, There's a lot of different stuff. You know, as a young person, if it was me, I would learn as much stuff as I do. I'd go on my college, there's all these websites like Coursera, Khan Academy, Udemy, and I'd learn things about marketing and the internet and websites and all these things that you see people making money on. And I'd learn as much as I can. I'd take it all in and see where my aptitude is, and then also see what I enjoy. You know, when you're 18, you start a major, you don't really know what you like, because I'll tell you for sure, accounting is fucking boring. And accounting is fucking awfully boring. These are the two most awful, they're the two subjects, only two subjects I probably would never take in college, but that's me because that's my aptitude. I suck at finance, I suck at accounting, I have a third grade reading level, I'm not good at that stuff. And so learning as much different things as you can by taking online classes and different classes and finding out what you enjoy and then also what you have aptitude for is going to be really, really important. Test out some things. Don't be afraid to test out some things that you may or may not think makes money. Okay? You know, you can go through a course book and they'll have the average salary of the people that get when you get out of college. A petroleum engineer makes 80, and this guy makes 70, and this guy makes 40. But the thing is, if you're miserable at your job, you're probably not going to make that much money in it, because the people that make tons of money, that are really good at their jobs, they usually love it. That's why they're good, because they're able to work harder and work longer and work faster than you are or any of their competitors in that workplace because they love it, right? Like for me, I have all these people, I have all these competitors, I've had so many students. A lot of my students have started their own websites similar to mine, and it's awesome. I always give them help, and I walk them through. I even send them customers, and people always ask me, like my own employees, ask me, why are you sending Chris like all these customers? I said, well, it doesn't matter. Why not? Let him make 20 grand a month. He's never going to beat me. He can't, because nobody is going to ever push it harder than I do, because nobody loves this more than I do. I mean, nobody does, right? And I know it, because anytime I see somebody come and you want to take something from me, you're going to rip it. I have to rip it out of my freaking lifeless hands and beat me to death with it. So find something that you like to do, my man. Mr. Patel, man, we got all the brown people in here. Of course, you get a free webinar, and all my cousins come in. I got Desai's and Patel's. My mom's Patel. What's going on? Hey, Parv, remember, Parv, the bias of all stocks goes in with trends, right? Is it bear flag, bull flag? Where's the trend going? That's going to be, you always give precedence to the trend. Hey, Mr. Murphy, guys, Mr. Murphy's asking, do I believe in shorting penny stocks? Yeah, I do. I just don't do it. It's not in my expertise. Hey, Mr. Tran, how you doing? Mr. Tran is asking, like, what do you do if you have a job? I believe that you'd start off swing trading, right? You start off swing trading. Swing trading going to take up a lot less time during the day. Get your feet wet in the market. You can make just as much money swing trading as you can from day trading. It's all about what you're good at. There's not more money in day trading than swing trading. They're just different parameters. Hey, Todd, how you doing? I use daily charts on my swing trades. Mr. Feeney, how you doing? Mr. Feeney's asking, is it a good idea to use stochastics to help short a uptrending stock? Sure. I mean, that is part of it. There's a whole host of things that I look for when I'm going to short a stock, and that is one of them that I would use. Mr. Holt is asking, does a short trade executed in the same day classify as a day trade? Yes. Mr. Aguirre, how you doing? Have you ever thought about coming to San Francisco and doing a workshop? Yeah, no, I haven't. It's beach season, baby. I never leave the beach unless I have to. But if you've got enough people that want to come and hear me, I'd probably come. I do like being on the road. Mr. Pasco is asking, do I play options? Negative. Just not in my range of specialty. Guys, in trading, one of the things I've noticed is that you have to be a master of one. But if you're like a generalist, right, I do options, I do stocks, I do futures, your odds of success are really, really small because you won't develop a mastery over one subject. You know, you're like, if you're the jack of all trades as a trader, you're the jack of all losses, basically. You're jack off. I mean, you got nothing. Let's see here. Hey, Nicholas, how you doing? Nicholas asking, what is the best hour to trade in the day? And Nicholas, that's a personal preference because there's different hour, it's different strokes for different folks. I trade best in the first hour of the day. A majority of my students do not trade well in the first hour of the day. Not when they're new, because of the speed, right? Some people are born for speed. Some people are not. Some people are analyzers. And I'm not an analyzer, so I trade well in the open. Middle of the day when you have more time to actually do analyzing because things move so slow, I don't trade as well because I'm not an analyzer. Todd, do you always put in a hard stop? Todd, I don't always do anything. No, you know, there's nothing I do that's a set certainty. But I usually will, if I don't have a hard stop, I have a mental stop. Mr. Kim, Stephen Kim, if you can email me, I will make sure to get it to you. I'm sorry I went so fast. Mr. Ernest is asking on a 5-minute chart to use 5-day moving average. Nope, I don't. Hey Cecil, how you doing? My chat room is $99 a month. Hey Maureen, how you doing? How can retail day traders compete against HFTs and algorithms? Maureen, the other question I'd be asking is how do the HFT and algorithms compete with me? Right? I mean, I've never had a problem competing, but I bet that a lot of them don't make any money. Or just stay out of their way. Trade stocks that they can't get into. You know, one of the reasons that we trade like these momentum kind of low floater stocks sometimes is that, you know, they don't play those. And the other thing you have to know is that the HFTs typically hang out in like the 10 biggest stocks in the market. You know, historically, most of them are in that. Hey Jennifer, hi. Hey Jennifer, long time no see. Can you explain the PDT rule? Is it a buy, sell equals one trade, or buy equals one trade and sell equals one trade? A buy, then a corresponding sell equals one trade. Andre, guys, somebody's asking, how do you lose the fear of trading real money? How can you play your mind? Well, number one, I wouldn't trade money that I can't lose, right? So I don't have a fear of trading money because if I lose, it's not the end of my life. Second part is competence breeds confidence. When you don't have a lack, when you have a lack of a plan, when you have a lack of a repetition, then you have a lack of confidence. When you've done everything you can to do to prepare, when you've done everything you can do to train your body, your mind, everything to be the best, then you will have confidence. But till you get to that point, when you're spending your time guessing on what to do, then you have fear. But when you know what to do, the fear is minimal. How would you say you're more short bias or long bias, Mr. Vespa? I'm a both bias, I guess. I'm a money bias. I'm a money bias. I want to do whatever I can do to make money. Hey, Nitin. Hey, so Nitin is asking about how do you look at charts to invest? So one of my friends, I have a good friend that trades in a hedge fund. He tells me this in his hedge fund. He goes, he looks at the fundamentals to figure out what he wants to buy, and then he looks at the technicals to tell him when to buy. But if you just buy without context of when and where to buy, then you're going to lose money because you're just going to buy a stock, it's just going to do this. But when you have a stock because you like the fundamentals, because you want to invest in it, then use the technical to catch it right when it's going to explode, then you have the perfect investment. Jason Jones is asked about summer markets. I love the fucking summer market. I love the summer market. The summer market's awesome. You get these quick moves. You only have to trade half days. I mean, you'll be at the beach by 12 o'clock every day. It's freaking amazing. All this last week, I mean, I had like a $3,700 day, $2,500 day, $2,800 day. I lost $5,000 on Monday. But I was done by lunch every day. How awesome is that? The summer market, there's nothing better than summer market because you get to enjoy the summer. Hey, Mr. Husu, HSU, Husu. If you want something cheaper than TD Ameritrade, you could try Interactive Brokers or Speed Trader Pro. Both are good. I have an account at Speed Trader Pro, but I used to have an account at Interactive Brokers. Speed Trader's pretty good, and Interactive Brokers is pretty good. Interactive Brokers is pretty cheap too. They just charge per share. So if you're swing trading, it's pretty good. Hey, JP, how you doing? JP's asking about stocks that get halted. JP, stocks can get halted for literally seconds to sometimes hours to sometimes months. But typically if it's just halted because of exuberant trading, then it's usually just halted like intraday to just kind of slow it down, and then they let it go. Now, if the company committed fraud or something, they may, halt it for like a little bit longer period of time. And actually, it doesn't even matter if the company itself committed fraud. There's usually a whole host of oddball circumstances that would keep it halted longer than the day. I've only seen it 1 or 2 times. Hey, Nitin, damn, Indian people are so stubborn. Nitin, what did I tell you? How many charts did I tell you have to look at before it's going to make sense? A lot. Hey, by the way, my brother goes to College Park. He is 21. Do you know Kushal Desai? Dude, man, he's a stud. Hold on. You got to go meet him. Nitin. Hopefully he'll be running this company someday. It's my brother. He's a ladies' man, too. Nitin, if you're an Indian guy, you're probably not getting any chicks. My brother is the man, though. Indians, I was like that, too. Indian guys never get chicks. But, dude, my brother's a stud. Look at this gigolo shirt he's got going on. He's going to be so embarrassed I just wrote that. Edwin Martin, I do use VWAP. Mr. Hisu, I use full stochastics. If you don't have an option for full, just try regular or fast. Hey, Ahmed, I don't have a NinjaTrader account, but I've seen some people use it. Yolanda, ADP has a lot of volume, so you won't have any trouble getting rid of the stock. See the volume in it? It's doing millions of shares. So to get rid of 1,000 is nothing. Guys, I don't have any copies of these today's deck. Not that I don't know how to get all that stuff out there. That's a little bit above my pay grade. Hey, for those of you guys asking, Mr. Marino, what's better, EMAs or SMAs? There's no such thing as better. It's just what works better in your system. What works better for you? Mr. Cafferty, probably about 75% of the time, he's asking, do I buy before breakout or wait for confirmation? Mr. Cafferty, it all depends on what's happening on smaller term time frames. If I get the good action, the pattern I want, way before the breakout, I will buy before anybody even senses the breakout because that's where the real breakout is. The breakout is never at the confirmation. It starts moving way before that. And the good traders are in at that spot, but that spot is often the real confirmation, not the confirmation that most people see. Hey, Adam, Adam's asking how long it took me to get the hang of trading. I'll be honest, it took me a lot of years. In the beginning, I didn't have a mentor or anything, and I was just like aimlessly going around without a system, without like a means of tracking my results. I was just aimlessly like just buying stuff, hoping to get like lucky and hit the lotto and, you know, like thinking like, oh, I figured this out, and I had no way to track what I was doing. And so my random system, a random methodology equals random results. Hey, Eli, how you doing? I'm 50-50 on earnings versus shorts. Guys, VWAP means volume weighted average price. Mr. Ben, Mr. Daniel, I don't use 1 minute charts. Hi, hey, Paul, how you doing? So swing trade is essentially just something that I'm holding longer than a day, right? A day trade is something that you're holding for 1 day. A swing trade to me is something I'm holding longer than that. Hey, Matthew, how you doing? Matthew, Matthew Petherbridge. Most of everything you're going to need for the intro class is already in this one. You'll be good to go. I'll give you some study to do after this. Young man, I'll point you in the right direction. Hey, Shane, I'm using trade IDs to look for my PR earnings gappers. Paul, the reason the biotechs have a lot of risk is that they have like news events randomly. So like you know, news not randomly, but they have news events. So you could be like $16 and then you wake up and it's like boom. You know, you can have like these crazy just moves down. Like you see a biotech's at 12 and it opens up at 3, right? And, you know, because of the news. So like regular stocks don't have that kind of make or break news, right? Like Microsoft's not going to have a news that's dumps it down to $3. You know what I mean? But biotech companies, they just have like one or two products. They'll often do that. Venkat, I went over in this class how to set up the charts. It's pretty simple. Also YouTube. What's going on? If I could turn back time. What you listen to over there, bro? Those of you guys don't know, this big chubby stud over there, that's one of my students, Chris, the Wooten. Chris, say hi to everybody, man.
Hola.
Mi amo. Chris. Chris is awesome. Chris bought a Groupon class for me for like $50 a couple years ago. And one day he just showed up here with like a toothbrush and a bag, and he like never left. And so now he's just eating my food and living without rent. He's really, he's a smart fucker, right? If you want to make it as a trader, what better way than just show up at somebody's house and say, ta-da, because he knows, right? In this family, we just, right? Big Daddy takes care of his friend. So we trade all day, we hang out, and it's actually a lot of fun. It's been like a great time. So we've been really, really kicking it the last, he's been living here. How long you been living here?
Coming up on a year.
It's our 1 year anniversary, baby. So it was awesome. When he moved in, he had like this like tiny little bag. He had like toothbrush and some deodorant. And he's like, all right, man, I'll see you around. And he just like, kind of went in the bedroom. And we have a couple spare bedrooms. That was the last, that was all she wrote. Mr. Todd Tillman, I am from, Todd Tillman, I am in Michigan. Oh, man. See, something like this, I mean, you basically, I don't know where you bought it. If you bought it recently, then I'd cut it. Yeah, this is a big turd. This is like a turd of turds. Where was your buy price on this? Hey, Mr. Westendeck, all IRAs don't have margin. Hey, Mr. Mund, I don't think gap plays have changed much. They seem to be always the same. Hey, Bob, I'm not a big believer in mutual funds. I'd rather use ETFs. That's just my personal thing. The mutual funds just have too many fees. Mr. Phillips, short trading just means like you're betting on a stock to go down, right? So like you buy a stock and you want it to go up. When you short a stock, you want it to go down, and you make money as it goes down. Hey, Jason, in my chat room, only I call the plays. Till somebody's better than me, Ain't nobody else called the plays, not even Paul. Hey, Paige, I don't think that free stock charts is a download. You just log in. Oh, and Jason, Paul does swing trades, right? So, he's the man at the swing trade. He's just getting more into the day trade. So, he does the swing trade side. I do the day trade side. AJ, if you start out swing trading, is it difficult to transition to day trader? I don't believe so. I think that you have to learn both. Swing trading, day trading are different skills. Swing trading and different skills. But they're all based. So like all the stuff I do as a day trader, I learned from Paul, even though he wasn't day trading. I took his swing trade stuff and I just moved it to a smaller time frame, but it's the same stuff. Rakesh, what do you mean? Average shares? Sometimes. Stefan, when I'm shorting stocks, I almost always short stocks that require borrows. I'm always shorting the big turds. Like, when I made $3,700 the other day, I was shorting this EBIO. I mean, you're not going to find this borrow on Ameritrade. We were shorting this little turd. Like these, I do short a lot of these type of stocks that, the gap up and then hey, Paige, how you doing? Paige says, how long does it take for a person to make $1,200 a day after going live? There is no time limit. It could be anywhere from 60 days to never, because every person, think about this, like you have a job. You ever go to your work and you see some people, they're awesome. They have their shit together. They show up on time. They take care of shit. They're killers. When you ever go to your office, you see some people, you're like, look at that slob. He never does anything right. Comes in late, talks back, doesn't do anything right, turns in his work late, right? Is that person ever going to make $1,200? Probably not, right? But when you see the person that's doing everything they can to succeed, that person has a much better chance. Hey, Joseph, I use TD Ameritrade to do swing trades. I think you'll be okay. Hey, Joseph, you can use this free stock charts. I mean, that's why I gave it to you guys. It's got daily charts on it. You can do anything on here. I do not have PTN on my radar, mostly because this thing's just this epic turd. PTN hasn't done anything in years. Once it does something, I'll come back to it. And look at the last time this stock moved. Never. And this is 2008. So this stock's just been stuck for all these years. If it ever does move, it'd be nice, but I mean, it could be a few years. Hey, Money Builder, what's your question, bro? It's not about whether anybody's there. It's about whether you're there. I'm always here. Let's see. If I could turn back time. Hey, Willie, what's the single best advice you received? That came from one of my business coaches many moons ago that told me to work a job that I never felt like was work. Because he told me, he's like, you're going to have to go, how does a man go harder and longer and stronger? That sounds almost a little sexual, but more than any other person that he knows, right? Because that's kind of what you need to be successful. How do you push yourself to those levels? How do you pick yourself up off the ground when you've just been knocked down so many times? How can you do that if you don't love it? In trading or in business, you just get knocked down so many times. You open so many doors. I've opened so many doors in business and they've just all been shut in my face. The only thing is you only need one door to open and stay open, right? I've had so many doors shut in my face. So how do you keep doing it, right? How do you keep doing it if you're just doing it for the money? Like you get knocked down 15 times, you're saying, oh my God, I'm going to make 6 figures. Well, you might as well just be a pharmacist or something, right? Or, go do something like get a better degree and do something. You can't just keep getting up unless you love it. So he always told me, he kept asking me always, like, is this your passion? I said, yes. It's the only thing I think about to this day. So I've been trading all these years. I still dream about stocks sometimes. And on Monday, I'm pretty pumped. Like, yeah, I'm pumped to go to work. I'm up. I'm ready. And that's awesome. And today, this is a free webinar. This webinar has gone on longer than my paid webinar. Why? Because I didn't even realize it was a free webinar. Because I don't care. There's no such thing as free and paid. Once the lights go on, and I got people in front of me, I'm gonna put on a fucking show. That's how it goes, right? And so, do something you like to do. It makes your life a lot easier. Mr. Pabone, E-Trade versus Scottrade. Try them both. See which platform you like. They're both similar in price. Stefan, I don't have to pay or call my broker on the phone to short stocks. I can short almost anything. Israel Gutierrez, my man, how you doing, bro? Yes, Bollinger Bands can be effective, especially to find stocks that have gone too far one way or the other. Ellie Sadinia, when I'm day trading, I use this platform. It's mine. It's an internal platform that's mine. So that me and my students trade off of. It's not a retail platform. It's a little bit bare bones, but it's kind of cool and it's very fast. Eli, I've never seen a trader use a Mac before. I don't think you can actually trade on Macs. I've got a freaking $5,000 MacBook that's like this paperweight. Big piece. Somebody said, what do you use that expensive Mac for? I said, to Facebook and go on Match.com because it's no good for trading. Mr. Joe Bousset, we have our own hedge fund. It's called ClickFund. I use that for my primary direct access. Hey, thanks, Jade. Appreciate it. Venkat, STNL is, let me take a look here, buddy. But, man, this stock is usually a big piece of shit. It needs to go and have a PR before it ever goes. These type of stocks, look at this thing. It's just down, 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 and down. This is one of those instances where cheap gets cheaper. Cheap becomes a big pile of crapola. Hey, money builder, you get out of a trade when it's time to get out of a trade. Come up with the reasons to sell list. Selling is not a static list. There's not just one single reason that you sell a stock. there could be a confluence of 15 to 20 different reasons when you may want to get out of a stock. And it all depends on, number one, what type of trading you do. Number two, what type of time frame you do. Number three, what type of stuff is going on in the market. Number four, what type of setup you go and the rules of that setup that will give you the sell points on when and where you get out of a stock. Hey, Mr. Baker, appreciate it, baby. I always got time for you, my friend. Oh, Jason, yeah, the swing trade and the day trade are different services. I'm sorry, I didn't understand your question. Hey, Kumar, fuck, you Indian people, man. You got my last name, so I'm not going to just beat you up. Did I not just tell you the cheap stocks are cheap because they suck? The question is, I'd like to learn more about penny stocks. Kumar, give it up. There's no such thing as a good penny stock. Leave it alone. If you're going to do anything, maybe short them, but don't buy it. Hey, Paige, I'm usually trading like a few hours a day. I mean, during certain times of year, I may trade the whole day. I love trading. You know, my problem is actually that I love trading so much that sometimes I don't leave when I'm supposed to. And Carlos, we're just in one, we're in one small section of class yet. Overbought means stock's way too extended. There's a high probability of it coming back down. Oversold is the opposite. It's just one piece of a small puzzle. Hey, Jay, there's an airline that I've been watching, this VA. This one tends to move, it's making like a flag pattern. It tends to move pretty well. And Mr. Kim, I don't know anything about Apple suppliers. Mr. Hamilton, I do not feel, Mr. Hamilton saying, are there any legit opportunities in marijuana stocks? Not that I've seen. But I'm not an expert in marijuanas. I'm more of a Miller Lite type of guy. Mr. Moore, what does your question mean? Are there limits on shorts? Hey, Riley, I don't have, I don't have an account at Speed Trader, so I'm not sure. They're not in the country, so it's like, it's one of them things of just, there's probably some better options out there, but I haven't heard anything negative about them either. And the other thing is, unless you've been totally educated and you've got money, you shouldn't be trading live anyways. You have to ask yourself, can I make money every single day for a fact? Do I got a business plan? And if you got those things, then you might as well trade, with me. Wine on Mac. I've never heard of wine. I've got on my Mac Parallels, but it slows down my computer. Hey, Parv, how you doing? Parv, so it's supposed for somebody to work with you, does a seminar and get the program. Parv, possible, for sure. Anything's possible, baby. Hey, Ruby, there's no type of trading you can do without watching the market, sadly. Not that I've seen. Dorian, it's a lie when people say 90% of traders lose. It's more like 99. But it always comes down to strategy. Do I have an edge? Can I execute my edge? Can I get my fingers to do what my brain needs to do? But do you know for a fact you can go out and make money every day? Right? Do you have that edge? You know, you need that. And then once you have it, you still have to be able to go execute it. Damien, you can't short any stock. There are certain brokers where you'll have better ability to short certain stocks, but you know, not all stocks are shorted because there has to be availability for the borrower. Hey, Mr. Paul, I'm not sure if there is a replay on this just yet. I haven't recorded it, but somebody else might be. And Mr. Kim, it's not that trading's not good on Max. It just happens to be that a lot of the platforms don't work on Max. Some do, some don't. So you'd have to also research what platforms you're going to use. Yes, some does. Lewis, a day trade means it's for the day, and swing trade just means it's longer than the day. Anybody else? Speak now or forever hold your peace. Oh, I think this was a buyout stock. That's why it's stuck here. I'd probably make sure you read the news and make sure it's not bought out. David Papan, you don't have, what's your question in terms of, there's nothing to speak on unless you know, unless you tell me what you want me to speak on. Hey, Money Builder, I already told you, I already answered that question twice for you, my friend, by the way. Focus, baby. Usually stocks pop when there's more buyers than sellers. More buyers than sellers, stocks go up. More sellers than buyers, stocks go down. Money Builder, what's your question? Be specific, considering I already answered it. If you've got a specific one, it would guide me to what you're looking for. Weon Wusu, what's your take on breakouts in sideways markets? I take breakouts. It just depends on the situation. There's certain types of breakouts that work in this market. There's certain types that don't. But there's a whole process in terms of filtering into the type of breakouts that could work in this market. Money Builder, always use stop losses, bro. And Louis Velma, the great qualities of a swing trader are the same great qualities of a day trader. And guys, I'm willing to risk anywhere from $200 to $5,000 on one trade. A couple of people asked me that, Mr. Palmier, also. Mr. Papone, stocks only pop like this when a news comes out. I hit this thing right. I had a 295. Mr. Moore, I do not have a daily goal when I'm trading. I'm more interested in whether I'm making good process. If my process is good, if you attack the process, your results will be good, but you cannot have a results goal unless your process is locked down. ERX, I'm not sure on this one. I don't see anything here. I would recommend, Mr. Palmier, to trade whatever it is that you're better at. So certain people will have a more inclination to day trade versus swing trade. Certain people are just better at stuff. It depends on your job situation also. Those are all different things that would help. Like I was, because I learned from Paul, I was like a pretty good swing trader. I was good enough where I could quit my job. But when I started day trading, I became a lot better because it just suited my personality. And so I did a lot better on day trading. All right, folks, anybody else got any questions? Speak now or forever hold your peace. And of course, you know, send me an email if I missed anything. Guys, there was like 7,000 questions. I think I got to all of them. I've literally just kind of hacked down a piece by piece as much as it goes down. So I think I got to it all. You let me know if I missed anything. Anywho, tomorrow is another day, folks. Boom, 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 boom. And guys, remember, just, you know, if I missed you, I'm not doing it on purpose. You know, nothing like that. You can always email me, and I will make sure to get you what you need. I will not forget you. All right, folks? Peace.